Hallo und herzlich willkommen zu unserer heutigen Sendung aus dem Energiestudio in Berlin. Wir wollen Ihnen heute wieder den aktuellen Gas Market Report der Internationalen Energieagentur vorstellen. Mein Name ist Charlie Grüneberg, ich leite die Kommunikation hier bei Zukunft Gas. Den Report selber werden uns die IEA-Experten Gergely Molnar und sein Kollege Frederik Ritter vorstellen. Wir sind sehr gespannt, denn der internationale Gashandel ist zuletzt wieder stärker in den Blickpunkt gerückt. Zum einen haben wir in den vergangenen Tagen mit Großhandelspreisen um die 25 € je Megawattstunde so tiefe Preise gesehen wie zuletzt vor 6 Monaten. Zum anderen hat aber US-Präsident Biden kürzlich mit seinem Moratorium für neue LNG-Projekte Sorgen geweckt, wie sicher die Versorgung mit LNG in der zweiten Hälfte des laufenden Jahrzehnts sein wird. In den kommenden 60 Minuten wollen wir aber auch noch mal einen abschließenden Blick auf das vergangene Jahr werfen. Die Veranstaltung wird wie gewohnt aufgezeichnet und im Nachgang auf unserem YouTube-Kanal veröffentlicht. Wir senden Ihnen die Präsentationen der Referenten und den Link zur Aufzeichnung sowie den Report später auch zu. Wenn Sie im Verlauf der Veranstaltung Fragen haben, dann nutzen Sie gerne die Handhebefunktion oder schreiben Sie Ihre Frage in den Chat. And now I will switch to English, and I'm very happy to have you, Gergely, here with us, and also a warm welcome to your colleague Frederik Ritter. It's always very interesting for us to hear from you what has happened in the last weeks in the gas market. And there are a lot of interesting topics. So in the newest edition of the report, the IEA put a special spotlight on greenhouse gas emissions along gas supply chains and on initiatives to reduce that emissions. So Gergely Molnar and Frederik Ritter, the floor is yours.
Thank you for your kind words of introduction, Charlie. My name is Gergely Molnar. I'm a gas analyst at the International Energy Agency, and today I'm joined by my colleague Frederik Ritter to present our latest quarterly gas report. We just published about a couple of weeks ago, and which is, of course, available free of charge on our website, iea.org. And today's presentation will be very much structured along the lines of this report. First, we will have a look back on the global trends in 2023 and on the short-term outlook for 2024. Then we will have a closer look on what is happening on the European market, and then Frederik will provide us with some insights regarding the Asian market dynamics. And then last but not least, we will also discuss the most recent developments related to low emission gases. Now, this chart gives us just, an overview of this price roller coaster in which we have been living in the last 2 years. We see that in 2022, gas prices rose to all-time highs across all the key gas regions, but then we also see that 2023 brought some of the easing of market fundamentals and reduced price tensions. In Europe and Asia, gas prices, spot prices have declined by about 70% compared to their all-time highs in 2022. And in the United States, Henry Hub prices moderated by about 60% compared to 2022. And in our reading, this is really due to a combination of factors, including timely policy action, effectively working market forces, as well as favorable weather conditions, such as mild winter, both in Q1 and Q4. But also, it is maybe notable that when we are looking at a regional comparison, we see that European gas prices remain 4 to 5 times above the levels of the prices in the United States, which of course raises a number of questions about the long-term competitiveness of European gas and energy-intensive industry. And also, I think it is important to note that this easing of market fundamentals in 2023 happened despite a tightening of the supply side, because when we are looking at the main trade channels, what we saw is that the rather limited increase in LNG supply, which was just about 13 BCM, was of course not sufficient to offset the continued reduction in Russian piped gas deliveries to the European Union, which dropped by about 38 BCM. So in this context, it has been really the demand side, which was in the driving seat and which played a fundamental role in easing up price tensions. On this slide, we are showing how demand evolved in 2023 in the key import markets of Europe and Asia, as well as South America. And I think what is really important to note here is that we have witnessed quite steep demand reductions in Europe, as well as in the major Asian markets. And natural gas demand returned to growth only in the second half of 2023, primarily driven by China and some of the other fast-growing Asian markets, such as India, as well as emerging Asian markets in Southeast Asia. On this slide, we are giving a more complete view of our latest estimates on how global gas consumption evolved in 2023. And our latest estimates indicate that global gas demand increased by just a mere 0.5% in 2023, which was, of course, not sufficient to offset the losses recorded in 2022, when global gas demand declined by about 1.5%. In terms of the drivers, I think it is important to note that industrial gas consumption and gas-to-power demand increased in 2023, but this growth has been partially offset by the continued reduction in residential and commercial sectors, which is partly due to the unseasonably mild winter weather conditions. And this pattern is really apparent when we are looking at North America, where natural gas consumption increased by an estimated 1% on 10 BCM, and most of that growth has been driven by higher gas burn in the power sector. In the United States, the share of natural gas in the power mix rose to an all-time high of 43% in 2023. But most of those gains were in a way eroded by the declines we have witnessed in the residential and commercial sectors, which is again primarily due to the mild winter weather conditions. When we are looking at the Asia-Pacific region, our estimates indicate that after a 1.5% decline in 2022, gas demand returned to a clear growth pattern in that region and increased by 2.5%. But of course, there are quite some divergences from one market to another. When we are looking at the major Asian markets, such as Japan, Korea, or Singapore, we see that gas demand declined, which is primarily due to the improving nuclear availability in Japan and Korea. While when we are looking at, for instance, to China, we see that gas demand returned to a very strong growth and increased by about 7%, which was driven by all the end-use sectors, but primarily by industry, energy own use, as well as gas-to-power demand. And then we have what we call the gas-rich regions, which include the Middle East and Eurasia and Africa. And here, natural gas consumption increased, supported by improving supply availability and primarily driven by the power sector, as well as to a certain extent by higher gas use in industry. And when it comes to Europe, and we will discuss this in greater detail in a couple of minutes, but maybe here just to note that our estimates indicate that European gas consumption declined by about 7% in 2023, and 75% of this demand reduction was concentrated in the power sector. Last but not least, natural gas consumption declined marginally in Central and South America, primarily because healthy hydro availability was weighing on the gas burn in Brazil. So when we are looking at to our outlook for 2024, we expect that natural gas demand will return to a more robust growth and will increase by about 2.5% or 100 BCM. And as we can see on this slide, all the regions are expected to contribute to that growth. But maybe just to highlight that the Asia-Pacific region will continue to be the key driving force, accounting for about 40% of incremental demand in 2024. On this slide, we are giving a more detailed breakdown of our forecast by sector and by region. If we look at the first column, we see that we expect that residential and commercial sectors will account for 40% of gas demand growth in 2024. And this is very much driven by the assumption that we will return to average weather conditions, and this will support higher space heating requirements. And then on the top of that, we also take into account the gasification programs which are going on in China, Iran, and Russia. The second big growth driver is the industrial sector, which alone accounts for about 1/3 of incremental gas demand in 2024. And most of that is, of course, concentrated in the fast-growing markets of the Asia-Pacific, as well as the Middle East. But we also expect that some of that growth in industry will be not structural growth, but it will be rather a recovery to the pre-crisis levels, especially in Europe and in some of the price-sensitive Southeast Asian markets. And when it comes to the power sector, it is really pulled into different directions across the markets. In the major Asian markets, as well as in Europe, we expect that gas to power demand will continue to decline because of the rapid expansion of renewables, efficiency gains, as well as improving nuclear availability. On the other hand, we expect that gas burn in the power sector will continue to grow in North America, as well as in some of the Asian markets and in the gas-rich countries of the Middle East, Africa, and Eurasia. But altogether, when we are looking at this picture, I think it is notable that out of that 100 BCM of demand forecast, about half is due to our assumption that we will have average weather conditions, as well as a recovery in certain markets to the pre-crisis demand levels in some of the price-sensitive sectors. So this is just in a way to nuance this 2.5% demand growth, because some of that is purely weather and demand recovery, and not purely structural demand growth. On this slide, we are showing our expectations around the evolution of global gas supply availability, and we portray the key trade channels, which include, in our view, Europe's pipeline imports, China's pipeline imports, as well as global LNG supply. And as we can see on this chart, after 2 years when we witnessed a quite steep tightening of global gas supply, in 2024, we actually will see natural gas, which is available for global gas trading, is expected to increase, primarily due to improving LNG supply availability, as well as higher Russian pipe gas deliveries to China. On this slide, we are giving a bit more detailed picture on how we expect global LNG supply to evolve in 2024. In 2023, global LNG supply increase was very much concentrated in the United States, which alone accounted for about 80% of incremental supply. In our expectation, 2024 will be a more diverse picture. And of course, North America will continue to be an important driver of additional LNG supply, but it won't be the sole driver behind that growth. In North America, which is expected to account for about 30% of incremental LNG supply, the key drivers will be the ramp up of Freeport and the commissioning of Altamira FLNG in Mexico and the Plaquemines LNG export facility towards the very end of 2024. We expect that Africa will be an important contributor behind LNG supply growth, which is partly due to improving feed gas availability in Egypt and Nigeria, but also the commissioning of new LNG projects, which includes Congo FLNG, which started operations a couple of weeks ago, as well as Tortue FLNG, which is expected to start commercial operations in the third quarter of this year. A third component of that picture is Russia, where in 2023, both Sakhalin and Yamal LNG faced quite heavy maintenance. We don't expect this reoccur in 2024, so there will be some incremental supply coming from the existing plants, but also there is an expectation that Arctic LNG 2 Train 1 will start operations, which is also embedded in that forecast. Of course, there is a number of question marks on how this LNG coming from Arctic LNG 2 will be commercialized, how it will be marketed, considering the sanctions environment. Last but not least, in Indonesia, the Tangguh LNG Train 3 started operations at the end of 2023, and we expect that it will ramp up during 2024. Altogether, we expect that global LNG supply will increase by 3.5% or 18 BCM. But of course, this remains well below the 8% growth rate we have witnessed between 2016 and 2020. And there is a number of risks to this outlook, and most of those risks are of geopolitical nature. On this slide, we are showing a couple of recent examples on how geopolitical tension can impact negatively the gas market, and how they can, of course, fuel price volatility. We won't enumerate all these examples, maybe just to mention two recent ones. One, the Tamar field shut-in Israel, which had quite negative consequences both on the Israeli and the Egyptian gas market. The situation has stabilized since November 23. The other example is the Red Sea crisis, which disrupts LNG trade across the Red Sea, and actually we have seen a complete dry up of LNG trade along the Suez Canal. And of course, this does not necessarily lead to production curtailments, but it leads to suboptimal shipping routes, which are becoming more lengthy and more costly. It is estimated that reaching Europe from the Middle East takes 10 more days via the Cape of Good Hope, which is, of course, can put pressure on the shipping market and consequently on the LNG market. We haven't seen any tangible consequences yet on the market, which would have been translating into higher price volatility. But this, in a way, highlights how rapidly geopolitics can change and can impact the well-functioning of the market. In the next couple of slides, we would like to focus on Europe. And on this slide, we are just giving a bit of a historical perspective. In the last 2 years, European gas consumption have dropped by around 20% or more than 100 BCM, and it actually fell to its lowest level since 1995. And on this slide, we are giving a bit of breakdown of what had been driving this demand reduction. In 2022, most of the demand reduction was concentrated in the residential and commercial sectors, as well as in industry, where the most gas-intensive sectors faced production curtailments and shut-ins due to the very high price levels. This demand reduction continued in 2023, when natural gas consumption declined by about 7% or 35 BCM. But the drivers had been, in a way, changing. Most of the demand reduction was concentrated in the power sector due to the rapid expansion of renewables and improving nuclear availability, especially in France. We also continued to see demand declines in the residential and commercial sectors, partly because of milder weather conditions, but also non-weather related factors played a role in that, which includes efficiency gains, electrification of heat, fuel switching, as well as, unfortunately, rising affordability issues. I think that one interesting component is that in the second half of 2023, we started to see a gradual recovery happening in industrial gas use in Europe, which is partly due to the lower gas price environment. And when we are looking at 2024, our expectation is that European gas demand will increase by just a mere 3%. And most of that growth is actually driven by the assumption of the return to average weather conditions, as well as some recovery in the industrial sectors, considering the lower price level. On the other hand, we expect that gas to power demand will continue to decline due to a number of factors, including efficiency gains, the expansion of renewables, and improving nuclear availability. On this slide, we are showing the supply picture for the European market, and also we would like maybe just to highlight that LNG really solidified its position as a baseload supply for the European market in 2023. Back in the 2010s, LNG accounted for about 10% of Europe's gas demand needs. This share increased quite steeply to 33% in 2022 and reached an all-time high of 37% in 2023. In contrast, the share of Russian piped gas have declined from around 40% before 2022 to just 10% in 2023. And when we are looking at 2024, we expect that LNG will retain its share, and actually Europe's LNG imports are expected to marginally increase compared to 2023, supported by the stronger demand which is expected. And maybe to close the Europe section with a positive note, on this slide we are showing where we stand in terms of storage levels. EU storage sites are at the moment almost 70% full, and are standing about 30% or 17 BCM above their 5-year average. And of course, these high inventory levels provide us with a safety buffer for the remainder of the winter, and could also ease up market tensions in the 2024 summer by reducing the need for storage injections. And with that, I would like to give the floor to my colleague, Frederick Ritter.
Great, thanks very much, Gergely, and hopefully you can hear me well. So I think a quick focus on Asia is worth a few minutes of our time here for a number of reasons. I think the first being that Asia continues to sway global gas market dynamics. Additionally, we'll see that Asia is one of these good examples of the recovery effect that played out in 2023, as well as the reality of diverging dynamics across different markets, that are very different in terms of their stage of maturity in the gas market. Additionally, I think this coming right after the Europe section is quite interesting, because Asia is on many fronts somewhat the flip side of the story that's happening in Europe, or that has been happening in Europe in 2023, 22, 23, and continuing into 2024. So let's first take a look at 2023. We're showing here two charts looking at the year-on-year changes in demand. So on the right, it's by regional split within Asia. And on the left, we're looking at the split by sector, or rather, I flipped to my right and my left here, but we'll switch those around. So here's where we see both the recovery effect and the diverging dynamics I mentioned before. So after a number of years of significant gas demand growth, barring 2020, of course, Asian gas demand fell by around 1.5% in 2022, so impacted notably by record gas prices. So this was the year where all markets in Asia were hit. This is what we see in the chart on the left, from the mature markets like Japan and Korea to the high potential markets, emerging markets as well. So if we look at the year 2022 in the chart on the right, just for a moment, this sensitivity to high gas prices in the region is quite clear, with most of this fall being concentrated in the power sector, of course, where we know that there is a high degree of price elasticity of demand. So in 2023, Asian gas demand growth rebounded to nearly 3%, or by nearly 3%. So from memory, let's keep in mind that this compares to a 7% drop in European demand and a slightly better than 1% increase in North American gas demand, for example. So Asia was the primary motor, we'll say, for gas demand growth in this past year. But of course, what we see in the chart on the left, and what this chart makes evident, is that this wasn't necessarily the case for all markets, like Japan, like Korea, for example. While in 2022, it was a bad year for everyone, in a sense, 2023 is where we see the emergence, or at least more correct would be the confirmation, to a certain extent, of the split in pathways between emerging and mature markets in Asia. So the former have recovered some of the lost demand from 2022 and even added extra demand, while the latter are really following a long-term decline. Here we're only seeing really the start of it. So let's close off this slide by turning back to the chart on the right, coming back to something that Gergely mentioned earlier in his slides. So power generation seems to be the missing element here from incremental demand in 2023, but the reality is that the reality is it's somewhat hidden behind different winds, or very varying winds, between Japan and Korea on the one hand, where continued return of nuclear reactors is eating into this power sector gas burn, and on the other hand, markets where lower prices and lower power demand growth, lower prices and higher power demand growth led to important recovery in demand in this sector. So on the next slide, we won't spend too much time on this here, but I think it is important to remember the other side of the equation here, LNG supply. If Asian demand fell in 2022, it was an issue of prices and availability of gas, fundamentally. So in 2023, pressure eased on these fronts, particularly over the second half of the year. And this is what we see with the gray line here, showing year-on-year change in LNG imports for total Asia-Pacific. So in the full year 2023, what we see is that Asian LNG imports recovered by over 4%, but we saw this liftoff, particularly from late summer onwards, which really corresponds, if we think back, to the period where there was the greatest relative decline in market prices from the prior year. So markets like Japan, Korea, Taiwan were broadly down year on year when taken together, but lower prices did allow emerging markets to come back to the spot market to seek cargoes. So remember that these are some of the most price-sensitive markets when it comes to sourcing LNG. And of course, we can't ignore the elephant in the room, if you will, China. So Chinese LNG demand grew by around 14% in 2023. But let's note that Chinese LNG imports and overall Asian LNG imports still remain below their 2021 peak. So imports have not fully recovered from that fall that we saw in 2022. On the next slide, let's turn to the forecast for 2024. I mentioned earlier that Asia will continue to be the primary motor of global gas demand growth. We expect Asia-Pacific to account for around 36% of total incremental demand this year, which should reach around 100 BCM, Gergely mentioned a little bit earlier in the presentation. So this is a similar share to the share that Asia had in global demand growth in 2023 as well. The sub-regional breakdown won't be much of a surprise to us either, with the vast majority of this growth being concentrated in China. So this means that overall, China is set to account for nearly 1/4 of global demand growth this year. In our outlook, China will be growing by around 6%, which is slightly down from last year's growth level. India will be around 6% as well, slightly up on last year's level. Japan and Korea, for example, together are down by a little over 1%. So overall, Asian gas demand should be up by around 4%, picking up from slightly under 3% in 2023. So lower prices, of course, a generally robust economic outlook, and favorable price context really contribute to this outlook. On the next slide, let's take a look at this, but from a sectoral point of view. So here we have incremental Asian gas demand by sector. Industry is where we see the most growth coming out of 2024, much like we saw in 2023. Lower gas prices allow for a degree of switching back to gas from alternative fuels adopted at the peak of the gas crunch. So this is something that we saw in 2023 as well, but we can see happening in 2024 to a certain degree. We also see growth in industrial activity leading to overall greater demand for the fuel in this sector. Just as an example, in India, we see fertilizer production as being an important element in this growth over the coming years. This is easing in 2024. Residential and commercial demand, mostly a story of distribution level development, we'll say, as gas reaches a greater penetration in building heating. So this is quite important in China, for example, but it should be noted that policy evolutions in the Chinese market are likely to keep this growth somewhat in check, so as not to run into logistical issues and regional pricing issues. Let's keep in mind that not all provinces in China face the same fuel-on-fuel competition, the same energy context, and the same relative affordability of different fuels. So the name of the game in this new wave, we'll say, of or phase of Chinese policy is somewhat orderly growth in demand over these next few years. Power generation column is quite telling here in our chart. Other emerging Asia here outstrips Chinese growth in this sector. So affordability is the key word. This regional grouping can be somewhat of a mixed bag in reality. This erases some of the key particularities in individual markets, it's true. But again, these are some of the most price-sensitive markets, and this is one of the most price-sensitive sectors. So under our outlook, what we see for 2024 is global market tensions continuing to ease, and this allows gas to compete on better terms for the power or within the power generation mix. And of course, we see power sector gas burn falling in markets like Japan and Korea. This is due to the continued ramp up of nuclear generation that we have seen in 2023 already. So finally, let's wrap up this parenthesis on Asia with a quick look at the supply side, and particularly LNG supply. So it's come up a few times here, of course, that 2022 supply crunch deeply affected the Asian markets, Asian overall gas demand, and Asian LNG imports. This we're all aware of. We're showing LNG imports by sub-region for Asia Pacific here, indexed on 2017 levels. So the starting point is somewhat arbitrary, yes, but at the same time, it represents a point before the big events and big extremes of these past few years. In 2019, it was one of the largest waves of liquefaction capacity coming online. 2020 was COVID, of course. 2022 was the complete shakeup of the markets by the supply crunch. And what we see in 2023 is that total Asia-Pacific LNG demand returned to growth. So that's the yellow line here in the chart that we're showing. 2024 is set to follow a similar trend. So with most of the region, barring markets like Japan and Korea, pulling in more volumes year on year. However, what we see in this chart is that we're not yet back at peak levels. So overall, as well as individually in markets like China, markets like India, for example, LNG imports are set to remain somewhat shy of their peak levels reached in 2021. Now I say peak level, but that's peak historical level. Nevertheless, given this context, Asia will undeniably be a big force in the LNG market, with growth markets outweighing potential losses. And the global market will have to keep its eyes looking towards this region. It's China that has signed a significant amount of long-term contracts over these past years that are equal to a significant share of the incremental supply coming on in 2024. So this is likely to leave relatively limited volumes for other markets and other regions. However, on the flip side, it's also Asia that we see. It's also in Asia that we see significant price sensitivity in LNG buying. So in those markets relying on spot purchases, for example, for some of their growth, any unexpected supply side complications in the market could undermine some of this growth. So in short, Asia will be and will continue to attract a lot of attention and will be a big part of how the market actually unravels in 2024. 2024, let's keep in mind, this is somewhat of a transition period before the next big wave of LNG in the second half of this decade. So I'll close off the parenthesis here on Asia, and I'll hand it over back to Gerke.
Thank you, Frederick. And now we are moving onto to the section on low emission gases. About a year ago at the IEA, we launched low emission gases work program, under which we are tracking short-term policy and market developments related to low emission gases, which includes biomethane and hydrogen, as well as e-methane. And when we are looking back to 2023, I think it is notable that low emission gases continued to benefit from a quite strong policy momentum. And on this slide, we just putting a couple of examples of the key policy and regulatory developments which relate to that space. Starting with India's national green hydrogen mission, which had been published in the start of the year, but also in Europe. The European Hydrogen Bank has been launched by the European Commission, which is a new funding mechanism. And then later at the end of the year, a political agreement has been found between the Council and the European Parliament on the EU hydrogen and decarbonized gas markets package, which lays down the foundations of a competitive market for renewable gases, as well as low emissions hydrogen. But we also see that the United States is taking a very active stance with the National Clean Hydrogen Strategy and Roadmap published in June, which sets targets for the development of low emissions hydrogen in the States. And then the Environmental Protection Agency issued the final renewable fuel standards rule, which is expected to boost biomethane production in the coming years. And we also should mention that the United States started its initiative to develop 7 regional clean hydrogen hubs. So those are, just a couple of examples on the strong policy momentum from which low emission gases are benefiting from. But on the other hand, when we are looking at the actual market developments, the picture is in a way less rosy. For instance, when we are considering that only 5% of the low emission hydrogen products which are expected by 2030, only 5% of them have reached FID, which clearly shows that there is a gap between policy ambition and what is being delivered on the ground. I think that when it comes to biomethane, the picture is somewhat more optimistic. Our estimates indicate that biomethane continued to expand strongly in 2023 and increased by around 10%. About 80% of this growth has been concentrated in Europe and in the United States, but we also see some very promising signs in Brazil and India. In Europe, biomethane growth has been really very much driven by 2 countries. In France, biomethane output rose by almost 1/3, which now puts France to the 2nd place, just behind Germany in terms of biomethane production. And in Denmark, biomethane output rose by about 15%, and now biomethane accounts for about 38% of Denmark's primary gas supply, which clearly shows that biomethane is quite a mature fuel and can really transform the gases market of certain countries. Maybe one slide also on e-methane, which is produced from low emissions hydrogen by adding into a carbon source. E-methane is somewhat rarely discussed in the European context, but we see a very strong push from Japan in terms of developing international e-methane supply chains with large LNG producers. And when we look at all the different non-binding agreements which have been signed in recent years, we see that global e-methane trade could rise to 1 BCM by 2030. Of course, there's a number of challenges associated with that, including the very high costs of e-methane production, but it is certainly considered in certain markets to reduce the emission intensity of gas supply chains. With that, I would like to thank you for your kind attention and looking forward to your comments and questions. Thank you.
Thanks a lot, Frederick and Gergely. And I already received a few questions. Biden's LNG moratorium focuses on exports to non-FTA countries. Will we see a growing divergence of prices between FTA and non-FTA markets in the future?
Well, maybe just to note that when we are looking at this temporary pause, we don't necessarily see any impact on the short and medium term market developments. I think it is important to highlight that at the moment, as we speak, there is over 100 BCM per year of LNG liquefaction capacity, which is under construction in the United States. And then there is also 145 BCM per year liquefaction capacity, which received non-FTA approvals, but haven't reached yet FID. So there is a quite long queue of projects. Now, when it comes to this particular question about the potential price divergence between FTA and non-FTA countries, I think it is notable that most of the major LNG importing countries are actually non-FTA. I think that one particular example would be Korea. So we don't necessarily see that there would be a growing divergence in the prices because most of the major importers would be impacted the same way because they are non-FTA countries.
Thank you. There's another question regarding Russia. If there would be sanctions against Russia, gas sanctions, at the moment there aren't any. What would be the real effects on Russia, on the EU, in short and in long term?
So I think that at the moment, what is being discussed at the EU level is to have a legal framework which would offer to certain member states to introduce a ban on Russian LNG imports. I think even at now there are ways to reduce Russian LNG imports or just to ban them by having a regulatory framework at the LNG import terminal level. And this is something which is applied, I think, at the Inkoo terminal in Finland, at certain LNG import facilities in Germany, as well as at the Gate terminal in the Netherlands. But I think that when we are discussing Europe's LNG imports from Russia, we also need to mention that those LNG imports are quite concentrated in just a few countries. including Belgium, France, and Spain. Of course, some of that regasified LNG is consumed in other markets, but in terms of direct imports, it is really concentrated in those three markets. So I guess that this is a question of what would be the preference of these countries.
Another question is about LNG. Well, I will put it in two questions. What are the main LNG suppliers for the EU? Okay, number one is the USA, but which other countries are main LNG suppliers? Has there been any changes in the last months? And what are the main countries in Europe where the LNG deliveries are coming to?
No, in terms of the major suppliers to Europe, it would be, of course, the United States, but then followed by Russia and Qatar. And could you please repeat the second half of your question, of the question?
Well, what are the countries in Europe where the LNG is going to? What are the main countries?
So the largest LNG importing countries would be, of course, the United Kingdom, Spain, France, and then we have, of course, Belgium and the Netherlands. But Belgium and the Netherlands are also serving as a transit country for regasified LNG to more continental Europe, including to Germany, but also would like to highlight that Germany is one of the fastest growing LNG import market in Europe. And of course, this is facilitated by the 3 FSRUs, which are already in operation. And also there is 3 additional FSRUs, which are expected to start operations at this year.
Mm-hmm. And then let's also have a look to Asia. You mentioned that Asia Pacific will be the key region for demand growth. What does that mean for the prices in Asia and in Europe?
Thanks for the question. Yeah, so it's an interesting point. I think it's difficult to imagine strong growth in all regions of the world without there being some pressure on prices. But ultimately, the question of any pressure, if there is pressure on prices, is going to be a two-sided equation, supply and demand. What we see in 2024 is that we're somewhat passing into some of the charts that we showed today. We're passing into this phase where there is year-on-year growth in global trade in gas. So there is incremental LNG supply, and there's less of a decline in pipeline supply globally. So 2024 is this transition period where the supply side is helping ease market tensions. And we expect in our forecast in 2024 that this incremental supply will be sufficient to serve extra demand in Europe, extra demand in Asia. Of course, when we move into the longer term outlook into 2025, 26, 27, this is a next phase that we're not talking about here in this market, but just to keep in mind, this is the next phase in global supply where there's a larger wave of LNG supply coming online. And we expect that this would help keep pressure down on prices.
Shell has also recently published its LNG outlook and has addressed the role of long-term contracts and the point that Europe will continue to be dependent on the spot market in the coming years. Do you share this assessment, and how will this affect prices in Europe and Asia?
Yes, so I think that it is important to note that in the past, so before the 2022, domestic production as well as long-term contracts accounted for about 80 to 90% of Europe's primary gas supply. In 2023, we estimate that about half of Europe's natural gas was procured either on the spot market or via flexible LNG contracts. And if the expiring contracts are not renewed, and if no new contracts are signed with non-Russian suppliers, then the share of spot and flexible LNG contracts could increase to about 70% by 2030. So in our view, there is a need to find a fine balance between long-term contracts and procurements from an increasingly liquid spot market. Because, of course, spot markets is providing a lot of flexibility, including in the short term, but it also can come at a greater price volatility than what you have in long-term contracts. So there is this trade-off between the two, and in our view, there is a need to find a balance between the two approaches.
Okay. Thank you, Frederick and Gergely, for these fruitful insights in the international gas market. It was, again, very interesting, and we are looking forward to the next report in about 3 months. Vielen Dank auch an Sie, liebe Zuschauerinnen und Zuschauer. Vielen Dank für Ihr Interesse, Ihre Fragen und die rege Teilnahme. Die Präsentation und den Report werden wir Ihnen im Nachgang zu dieser Veranstaltung zusenden. Die Veranstaltung selber können Sie zeitnah auf unserem YouTube-Kanal auch nochmal ansehen. Ich wünsche Ihnen einen erfolgreichen Tag, noch eine gute und erfolgreiche Woche und bleiben Sie gesund. Bis zum nächsten Mal.